Welcome to the Commercial Real Estate Podcast powered by First National. I'm Aaron. He's Adam, recording here live at the Toronto Real Estate Forum. I'd like to thank our sponsors, Glass Lake Funding, for sponsoring this episode. Of course, thank the Real Estate Forum for hosting us here. One of my favorite days of the year. It's very, very busy. There are thousands of people running around, and it's a great energy in this building. Our guest today is Iorwerth, who is the Deputy Chief Economist at CMHC. Thanks for joining us, Aled.
Thank you.
So this is a really interesting topic. We were just getting familiarized with Aled's work and what we were doing. And we're going to talk about a very topical discussion. You have an incredible view into what's transpiring in the Canadian housing market. We've been talking for years on this podcast and about a housing crisis, about what's been transpiring. I can remember sitting, with this mic in my face, having guests on, trying to determine whether it was a supply issue or a demand issue, right? What was driving it? And that was 7 or 8 years ago. I think we've all concluded it's a supply issue, but we haven't figured out how to solve that yet. I mean, CMHC, you guys have announced how many units we need and revised those numbers over and over again. And it feels like the number of units we're building continues to decrease somehow. Maybe before we dive into what your work is describing and exploring, maybe just talk about your career first and how you ended up working at CMHC as an economist.
Sure. So my background is always been research oriented, fairly academic oriented. I have a PhD in economics from Western, but then I joined the Department of Finance, and I worked for a very long time at the Department of Finance, looking at stuff like economic productivity, climate change, innovation, human capital, more from the research perspective, but also trying to understand the long-term opportunities and challenges that Canada faces on all sorts of areas. So I did that for a long time, and then I switched to CMHC in 2016. I've been bringing that sort of research background to CMHC and really trying to dig into some of the housing problems in Canada. I did a major report, or we did a major report in 2018, trying to dig into what was going wrong. That report had quite an impact, but maybe more at the bureaucratic level, and maybe not too many people know about it, but it was a little bit the foundation for future work in highlighting the problems with housing supply. And then the major step forward in 2022, I think, when we started producing more estimates of how much supply we actually needed. And these reports were the ones that really started to change the policy, the public debate in Canada, away from stuff like foreign investment and towards stuff like we need to get more housing built.
From a job satisfaction standpoint for you, is it seeing a policy change, like that you're actually shaping the country as a result of your research, or where do you get the most job satisfaction from?
Yeah, that's the impact. That usually when you're doing this research, when you're doing analysis within government, you don't. It's sort of a bit tangential or a bit obscure where you see the results. So you may get a chart in a document or something. So it's hard to see the impact of what you're arguing for. And also, when you're doing this work, you can't, it's usually not your work alone. It's a lot of team work, and it's a lot of doing the work over and over again in order to try and persuade people to change. But when you start to see the actual impact in policy discussion, it's a little bit different in my role as well, because I speak to the media quite a lot, or I do podcasts like this and to try and influence things. And seeing that impact and the change in the debate based on solid analysis, solid data is actually quite rewarding.
So sitting in Toronto, and I described the debates that we were having while you were releasing that paper, that it is a supply issue. We were still discussing, is it demand or supply? And part of the reason was, particularly in Toronto and Vancouver, sort of the major urban centers, there were a ton of cranes in the sky, right? And it felt like there was lots and lots of supply coming on, and there had been. Maybe that's changed now, but even in the face of all of those condos and all of that new supply, market rents and affordability continued to deteriorate. How do you maybe just describe what that means to you?
Well, I think, and that was the hard part, because we did see supply going up, but the demand pattern was so strong. And it wasn't just number of people. Number of people is obviously important, but it was also rising incomes. There was the economic growth in Vancouver and Toronto. So there was a whole set of factors coming in on the demand side. So yes, we could say that supply was going up, but it was a lot more difficult to say, well, is it going up by enough? And that's where the research and the analysis started to show, well, yeah, okay, supply is going up, but it's not going up by enough given what we're seeing on the demand side. It was also trying to really dig in on the demand side. So when I first joined CMHC, there was a lot of discussion about foreign investment, investment from China and so forth. And we didn't have the data on that. Given my background in government, I've always been a little bit skeptical about solutions when you don't have data. And so I was inherently a little bit skeptical about this because we didn't have the data. We have more data now, but I don't think it reinforces the caution about foreign investment as being the problem, and that it was more linked to general increase in demand, higher income, higher population growth, and at the time, lower interest rates.
And there were still policies around trying to limit foreign investment, despite the data not supporting it. So we've got, I guess, an entire country to look at in this conversation today. So maybe we'll do the 30,000-foot view and then get a little more granular. To start off with, though, I mean, we're talking about a enormous landmass, very different economic markers across the country. How do you shape policies that are blanket at a national level when you've got such differences, and what's the biggest differences you see within Canada?
Sure, I think that's a fair point, and that's why the involvement of the federal government is always, you have to be a little bit careful of it, because housing is really local, and solutions need to be local, and that's why in the Canadian system, provinces have the lead responsibility. The slight caveat on that is if things go wrong on the credit side, as happened in the US in 2008, then it's the federal government that has to address that or solve that issue. But I think the housing system is really different across the country. Unfortunately, it seems to be converging in the wrong way. So if we'd have had this conversation, well, say pre-pandemic, I would have been complaining about a lack of affordability in Toronto and Vancouver. From where I'm sitting now, I'm complaining about housing affordability in Toronto, Vancouver, Ottawa, Montreal, Halifax, and so forth. So the problem is spreading. Now, there are other parts of the country where it remains relatively quite a bit more affordable, and I'm thinking in particular of the prairies here. Calgary and Edmonton, they have growth. Edmonton seems to be a well-functioning market. You have parts of the Atlantic that are becoming unaffordable because of population mobility across the country in response to the pandemic. So there are. I used to think of Canada's housing market as being almost three distinct markets. So Vancouver and Toronto on the one hand, but that's becoming bigger. The prairies, and then there may be other low growth areas, which I had been thinking of as Atlantic Canada. But then I get calls to discuss NIMBYism in St. John's, Newfoundland. And so it's the problem of the lack of housing supply, I think, is spreading across the country. And I think the challenge that Canadians face of a lack of housing affordability is becoming increasingly common.
What's the number right now? Like the number of units necessary? And maybe we can talk that through. I think most recently we redefined affordability to be 2019 levels.
Yeah, the challenge that we faced was what is realistic, what is achievable. So what we decided was, well, okay, given that feedback, we'll try and return to pre-pandemic levels of affordability, recognizing that if pre-pandemic levels of affordability in Vancouver and Toronto are not really affordable. So there's a little bit of a challenge that place. But what we're saying now is that we roughly need to double the pace of housing starts, and that was quoted in the conference this morning.
Yeah.
So we're what 250,000 at the moment, and we needed well over 400,000 across the country to get back to affordability. But the pattern, coming back to the previous question, it differs across the country.
Yeah, I'm sure you have, like, the math on 400,000 units a year to get to whatever the 1.5 million that's necessary. Like, it's a daunting amount of dollars necessary, and I know
humans and all of
yeah,
it.
I guess, like, I just I struggle with reconciling the amount of dollars just needed, and that's whether it's private sector and lending through financing and public investment. Like, it ends up being like $1 trillion if you do the math. Really, or multiples of trillions, and yet we have these announcements of, I'm throwing $30 million at this problem, and it's so I almost feel like we need to go the opposite way. Like, listen, there's a $1.8 trillion investment need. Where's that money going to come from in order for us to do it, and work backwards versus the other way around?
Yes, before getting to the money side, there's a people problem in that we do not have enough. We have a productivity problem in the residential construction industry, and so we need to have a lot more investment just in terms of improving productivity, improving robotics, prefab, all of that sort of stuff, to get more output from the industry, from the construction industry. But I agree with your point on the money side. It's a problem, however, that we have to solve. I mean, Canadians are really struggling with a lack of housing affordability, and so I don't really see a way around it.
No, I'm not suggesting I'm not suggesting it's insurmountable either. But I feel like the headlines of they've thrown $12 billion at Build Canada Homes, and isn't that amazing? It's like, yeah, it's good, and I'm not complaining. Like, thank you, but again, 12 billion compared to the multiples of trillions necessary to solve the housing crisis, it really isn't material at all, right?
Well, I think another theme that I'm developing at the moment is that we actually have 3 housing crises in Canada. So one housing crisis is in the north, across the territories, which I will leave aside for the moment. There's a housing crisis for low-income households, vulnerable Canadians. And that's where more social housing and government support is required in one form or another. Maybe more housing subsidies or whatever. That's a clear role for government in that space. And that's where Build Canada Homes, I think, is playing. But then there is the massive affordability challenge that middle-class Canadians are facing on the rental side, on the home ownership side. And that, there are government programs, CMHC programs that can help. But this is going to involve massive amounts of private sector money.
Yeah.
And we need to, and probably international. So it's that money that we need to organize, maybe suitable some incentives at the margin from the government. But this is going to have to be a private sector solution.
Yeah. I mean, it's funny. We've been having a series of episodes that all are seeming to be linked together, and you guys, the listeners, are going to have them in sequential sort of weeks. We had a very large European pension fund CEO on, talking about how it's very difficult for them to invest in Canada. They want to invest in apartments. They want to be here to help, but the tax codes just don't make the math make sense for them from a global investment sort of perspective. And I feel like you're going to need that money to add it up to whatever the trillions of dollars necessary. It's not going to come exclusively through sort of domestic means and government funding and then private financing.
I agree, and that was one thing I learned at the conference this morning. I don't know if it was the same Dutch guy, but there was another guy from Singapore saying, yes, there are opportunities in Canada, but there are, how shall I put it, bureaucratic restrictions on getting money into Canada, because they are, a lot of these funds are not taxed in their home countries, but they are taxed in Canada. So I think there's a lot of, shall we say, framework policies that need to be looked at. How can we get more investment from everybody involved in building housing, particularly these large-scale apartment structures? Getting more, 4-bedroom or 4-unit or 8-unit. I think that's relatively straightforward, but we need to go more at scale, and it's moving at scale, both in terms of investment, but also in terms of construction technologies. I think the real challenge is scale.
So in speaking with you now, it seems like obviously you're not just involved in the research, but it's taking a position, right? It's not just saying, hey, I've gone and researched and this is the numbers we're dealing with. You take a firm position and make recommendations, and it seemed that you would be aligned on the supply side. How well received is that when you're advocating for these solutions?
Well, I think it's generally well received. I think in general, it's where the governments are going. I feel that my role is try to influence at that high level and try and encourage movement in the right direction. And I feel that's where people want to go. There are obviously a lot of challenges in the actual implementation, which is not my role. But I feel that the tone of the debate has changed. So again, going back, so pre-pandemic, I think the debate was quite different. But now it seems that the direction of the debate has changed. I'm hearing from provincial governments that they are interested in increasing housing supply. Translating that into actual legislation is obviously a lot more difficult. But I feel that the mood has changed and the direction of travel has changed.
How do you reconcile the tone of sort of financialization of housing? I mean, you see this problem. You know, obviously the private sector has to play a major role, and yet there seems to be some sort of negative connotations at times with private ownership of housing.
Yes, and this is why we released quite a bit of research during the summer that really looked into this.
I read that. It was very encouraging. Yeah.
And our finding is we don't really identify what the concern is. That's not to say that all landlords are
we don't use that. We don't use that word here, by the way. They're not lords of the land. They're property owners.
Yeah. So
there's the negative connotation, right?
There needs to be some degree of regulation. There seems to be some sort of balance between protecting tenants and protecting. So this is not the argument. But what we were finding was that the rents charged by REITs, once you control for everything, once you look at the additional services that they provide, once you look at the additional amenities, once you look at where they're located, once you take all of these aspects into account, the rents they charge are not really different from non-REIT owned structures. So we did not really see what the challenge of financialization was. Now, as I said, there needs to be some degree of regulation in there. It can't be a complete free-for-all.
I mean, the landlord-tenant boards seem to provide that protection, right? We have a friend of the show, Sarah from Simply DBS. You know, Sarah Siegel, thanks. And she does the statistics and actually does tenant engagement surveys, and sort of massive across sort of a huge proportion of the tenants across I think across the GTA and other locations. And it was something like, I can't remember the number, but it was like 0.01% of tenants suggest that they feel like they've had an inappropriate increase in rents, which would mean basically nobody's experiencing sort of the sensationalized headlines we're seeing.
And we did additional research. So there's obviously been a lot of attention on rent evictions and those sort of strategies, but the numbers that we were finding was that the rate of eviction was of the order of 1% to 3%, which is tough for those who are evicted, but I don't think those sorts of magnitudes are appropriate to tarnish the entire industry.
And I wonder, did that include like the shadow rental market in the condo space?
Well, that's another issue. Like the data in splitting between purpose-built rental and the condo, this is where it gets a bit tricky. And I've been trying to encourage Statistics Canada to break down the data in that way, but they're finding it a bit tough. But according, for example, to the Canadian Housing Survey, there are very high rates of evictions when owners want to move in, which presumably only takes place in the secondary rental market and is not a function of purpose-built rentals.
Mark
moving into one of his units.
I just see Mark Carney going, I'm going to take that unit now. The president, CEO of CAPREIT. Right?
Yeah.
We just actually had Adrian Rock on this morning, and he brought up, a very valid point. And I'll bring it up now because you mentioned a lot of your research is kind of forward-looking on the idea of the shadow market, condo market. We have a lot of supply coming on for the next 18 months. rents are down. So if you're just to kind of look at this moment in time, you go, hey, we really put a dent in affordability. We have this big supply coming on. Rents are down, call it 20% net effective, whatever you want to use. But that is going to slow to a trickle very quickly in 18 months, give or take. And then market forces would be exerting upwards pressure on rent very quickly. Do you track that kind of risk? The fact that the shadow market will be tapering off very rapidly over the next...
Yeah, and that's something that's I find quite preoccupying at the moment, that there is this overhang from the condo, but we're also, I think, going to see a lot of challenges in the condo financing model. So I think pre-sales have dried up. I think the individual investors buying or putting money down to build condos in order to get those rental units, I think that's, well, I wouldn't say disappearing, but it's going to really decline. So what I'm seeing is, yes, there's an excess supply in the short term, but the longer term supply is really going to dry up. And so looking down 3 or 4 years, I'm not sure where the supply is going to come from.
So we have not solved affordability then, even if currently rents are down.
Yeah, and this is a bit of a phenomenon in tightly constrained markets, that they tend to be very cyclical, or I should say volatile, because there's no way of solving the long-term supply problem. So San Francisco, you have this the same volatility. So I think we need to continue to emphasize long-term demand for housing, particularly rental housing, and that we need to maintain production of housing over the long term.
Something that frustrates me in this, on this topic, this discussion, is the definition of affordability, and not, I know like CMHC's, insurance has this 30% of median renter income, and ACLP is a different definition, and I think BCH has now got a third definition. And the point is, like, affordability doesn't have to be defined by something, right? The concept is we need more units so that the cost comes down, so that it becomes more affordable, whatever the definition is. What I struggle with, though, is that affordability tag feels like it, maybe it's the politicians, needs to get sort of tagged to the development, right? And then we get these, and we have developers on sort of frequently that, they want to build, they're active, they've got the capital, they want to go, and then all of a sudden it's like, well, no problem, but you need to maintain a certain level of affordability in your building. And then all of a sudden math breaks down, no units get delivered. Like, how do you manage that from your perspective, from an advocacy perspective, to get the politicians to understand, like, stop trying to push affordability, just let them build and it will sort of naturally occur, right?
Yeah, and it gets even more complicated when people use the term affordable versus affordability. So, like, affordable housing, what exactly does that mean? And there's a whole range of definitions of what affordable is. I would also say, like, I have to, coming at this from a pure research point of view, is there's no real sound foundation for the 30% in the first place.
Yeah.
But I agree with you. I mean, what we need is long-term affordability, however it's defined. In order to get that, we need more housing supply, we need more built. And over time, through a filtering process, this will lead to downward pressure on house prices and on rents. So there's been a lot of research in the US arguing that this filtering process is the way you get to long-term affordability. So filtering means if you build new housing today, yes, it's going to be more expensive, but it's probably going to be better quality. But you get higher income households moving into that new product, and that frees up other space for lower income households to move into, and which frees up other space for people to move out of social and affordable housing into it. So you build up these vacancy chains. What's the cliche? The affordable housing of tomorrow is the luxury housing of today.
Can you not just point to Alberta and Edmonton and Calgary and go, look, no rent control, easy zoning changes, and they're the best market as far as affordable?
Yeah, and we released another paper on rent control this summer. That was an international review of what the evidence shows about rent control, and it's very highly nuanced. So you have affordability in Alberta with no rent control, but you also have affordability in Quebec with rent control. But then if you start to dig into the Quebec model, the rent control, for example, does not really kick in until after stabilization. So there's a lot of...
they have the tribunal, which allows you to increase if you spend money, so you can actually get above guideline increases if you're investing back in the property.
Right, so exactly. So there's no one standard model of rent control. And the way they do it in Quebec, the way they used to do it in Quebec, was that they try to implement it in a way that made it still profitable for developments to get built. Now, if you have a rent control system that's quite draconian, which inhibits or does not make it profitable to build any more housing, you're just perpetuating the original problem. Like, if you are concerned about people getting evicted, presumably the solution for this is to build more housing so that tenants have more choice.
Does that resonate when you're... I mean, you must have some audience with some of the policymakers.
I think it resonates to some extent, but then there are quite influential advocates out there as well that have opposing views. I think there is an element of time dimension. I think there's an element of some groups really focusing on low-income households, but that's not really what I'm talking about. I'm talking about market housing, rental ownership.
Non-profit, cooperative housing.
Yes.
Like there's a lot of course, there's absolute desire and need for that, but
exactly.
that's a sliver.
And that gets back to my previous comment that we have 3 housing crises. And so we have a housing crisis for low-income and vulnerable, which needs one set of policies, including social housing. But then we have a crisis for middle-class Canadians, which involves market solutions.
Yeah, we've got a client that describes it as workforce housing, and they think about it's the nurses, the teachers,
Right.
the paramedics, it's all those, the fire people, the firemen, I guess, and that police, like there's so many that need to live close to where they
Right.
work because they're so critical to the success of our communities, and they're squeezed out, right?
Yeah. And good incomes, but not rich. And it's,
But they need to be able to afford a 2 or 3 or 4 bedroom house in the neighborhood they work because they've got kids.
Exactly,
right?
and not have a 2-hour commute to get to their place of work one way. Yeah.
Yeah, right. So we all agree here. I don't understand. It seems like it's easy. I don't really get it.
You heard it here first. It's solved. One of the other issues, of course, right now is on the labor front. If we did manage to open the floodgates of development and pursue a supply-based solution, there are, of course, some other obstacles, one of which is just the labor required to do it. How much attention does CMHC pay to that? I'm sure you saw the announcement just yesterday of the U.S. announcing a visa program to incent tradespeople from Canada to move down there. It includes a path to citizenship. If I was 28 years old and no kids, it would be super attractive to me. If I was, 7 years into a trade, how much do you think about that? The ability to actually execute on a plan once, the floodgates did open.
I think it's an issue, and I think it's an area that we need to ramp up on. But I would broaden it beyond people in the workforce. I think we're faced with an aging population inherently. I don't know to what extent we can get more people involved in construction. And we also have, as we discussed previously, a massive scale issue. So I think we need to think broader about having more prefab, more automation, more robotics, more automation. I think that's where the opportunity lies. Yes, we need more people, but I think we need a fundamental rethinking of construction techniques as well. Again, going back to my research background, there was a very influential paper published in the US a year or two ago. One of the authors is now one of the governors of the Federal Reserve. And I think the title of the paper was The Awful State of Productivity in Residential Construction in the US. So this is a worldwide problem. There are statistics that productivity in construction in Europe has been going down. So I think, and there's a joke that the last major innovation in residential construction was construction of the Empire State Building. So I think we need some fundamental...
Is that a joke, or is that it's just a sad reality?
I try and present it as a joke, but I'm not sure if it's far from the truth. So I think we need more people, but I think we need to do some fundamental rethinking. We need more wood, mass timber, more prefab, more automation, more digitization. Countries like Singapore, the UK, France, if you're bidding for social and affordable housing contracts, You have to have adopted BEM technology. So that in other countries, other countries are starting to force the construction industry to digitize and to develop more technology. And I think this is where the future lies as well in Canada. So yes, more skilled tradespeople, but also a lot more automation.
One last question that I've got: how do you tie sort of climate resiliency construction, which inherently feels like it's more expensive, with just the desire to build more housing?
Yeah, I agree. I think that's the area that we have to go, but it's going to vary across the countries. The other part that I'm uncertain about is whether some parts of Canada will also be susceptible to sea level rise. So you could think of parts of Vancouver, Halifax, Montreal. I think we're going to have to look more seriously about, are we building in the right places? There's a lot of discussion around flood insurance, fire insurance because of climate change. So I think there are a lot of these risks on the horizon. I don't think it's only building technology, but it's also even the places that we build.
Yeah, curiously, we've not seen any valuation impact yet. Like I've not read an appraisal that said, we're going to adjust down because it's on this part of the floodplain versus that one.
Risk.
Right. Yeah.
And that's what you are starting to see in the U.S. Like
Right.
the mortgage-backed securities in the U.S. now, they're starting to look at it in Southern California. What are the risks in these securities when you take climate change, fires into account?
Yeah, because if you're given a 30, 40, 50-year amortization,
Right.
you're
The
exposed.
timer is, yeah.
Your probability of a 100-year event is 50%. So quick math. on the
Good
spot
math.
here.
Yeah, you're smart.
This is a super interesting conversation. I think we are out of time. Of course, I want to thank Aled for spending time with us today, sharing all his thoughts. Super insightful. Of course, we want to thank Glass Lake Funding, the sponsor of our speaker video series here at the Toronto Real Estate Forum. Community and Real Estate Forums, of course, has us here every year, and we thank them for it. That's a lot of thank yous, but none more, of course, than our guests. Thanks so much, Aled.
Thank you.